Have you heard that SpaceX is going public? Of course you have. It's everywhere. The first is Starlink, a satellite internet service. This is the part that actually works. Part of you wants in. Before you do anything, I want to show you what SpaceX actually is, what's inside this IPO, who benefits most from it, and why some of the smartest financial analysts in the world are deeply uncomfortable with what's happening. Because what SpaceX is, selling to ordinary investors, and what SpaceX actually is, are two very different things. SpaceX is not one company, it's at least three very different businesses packaged together and sold. The first is Starlink, a satellite internet service. This is the part that actually makes money. It has real customers paying real monthly fees for internet access in remote areas. This is a legitimate, profitable business. The second is SpaceX, the rocket company. The original business that launches satellites and cargo into space. This is real, this makes money, this is what most people picture when they hear the name. The third is X, the social media platform, formerly known as Twitter, and Grok, an AI company that is reportedly losing billions of dollars. Every quarter, when you buy SpaceX stock, you're buying all three. You don't get to choose. You're getting Starlink, which is valuable, bundled with a social media platform and an AI company that are burning cash at an alarming rate. And the valuation being put on the whole package is based on projections that assume all three businesses perform well simultaneously. Let me explain that. The public, the people who get rich, are the ones who were already inside. The founders, the early investors, the venture capital firms, the private equity funds. They've been holding shares for years, sometimes at valuations of pennies on the dollar compared to the IPO price. When the IPO happens, they can finally sell. And this is what's called exit liquidity. They're converting their private investment into public cash. The people who buy at the IPO price, ordinary investors, are providing that. Exit, they're the ones who allow early investors to cash out. This isn't inherently wrong. Some IPOs create genuine long-term value for public investors. Amazon went public in 1997 and created enormous wealth for early public shareholders. But many IPOs, especially during periods of high excitement, are moments where early insiders exit at peak enthusiasm, leaving public investors holding overvalued stock. The question you need to ask about every IPO is, at this price, am I getting genuine value? Or am I providing exit liquidity for someone else? Here's something that should concern every ordinary investor. With an index fund, normally to be included in major stock indexes, like the Russell 1000, or the S&P 500, a company has to meet certain requirements, usually including profitability. SpaceX doesn't meet those requirements. It loses billions of dollars, but the rules are being changed. Specifically for SpaceX, some indexes have already agreed to include SpaceX within 5 days of listing, waiving the standard. Profitability requirement. Why does this matter to you? Because if you have money in an index fund, and almost every retirement account does, you may soon be automatically invested in SpaceX, whether
you want to be or not, without ever making that choice, without ever reading a single
page of their financial statements. Index funds are supposed to be the safe, boring option. But When the rules change to include money-losing companies at the peak of a speculative cycle, they but become something different. I'm not saying SpaceX is worthless. Starlink is a real business with real bill value. The rocket company is real. What I am saying is that the price being asked for this IPO reflects maximum optimism about every part of the business, including the parts that are currently losing billions. Historically, buying at maximum optimism is not a great investment strategy. People who built wealth from the internet didn't buy at the peak of the dot-com bubble. They bought either earlier or after the crash, when prices reflected reality. The lesson isn't to avoid new technology, it's to buy it at the right price, with the right information, as you're part of a rational overall strategy. Building that kind of rational strategy is exactly what the Intelligent Cryptocurrency VIP program and Keystone Investors Club are designed to help with. Links are in the description. Take a look. In the next video, I'm going to zoom out and show you the full picture, how all of these pieces fit together, and why the AI bubble is now asking for yeah or money directly. Subscribe and hit the bell. I'll see you in. Welcome to Module 5 of the Wealth Blueprint. In this section, we will delve into advanced investment strategies and market analysis.